Hello, everybody. My name is Rachel Fisch, and I'm your host for today's webinar. Today's webinar is called Extreme Tax Overview Work From Home Edition. We had James Rhodes, who will be doing a lot of the talking, a lot more talking than I will today, but we had him for the SAGE forums back in May and June of this past year. The sessions were packed. The question and answer went more than half an hour over our time limits. And so we wanted to have him back to talk about some of the hot topics that we know are going to be a big deal in tax this year. So for this year, of course, with so many people working from home, and James is actually going to start off with what some of these numbers look like, we thought this would be a great opportunity. But again, whether you're an employer, an employee, or self-employed, that there might be some things about working from home that you need to know going into this tax year. My name is, as I mentioned, there we go, Rachel Fisch. I'm Product Evangelist for Accountant Solutions here at SAGE. You can read a little bit about me. My favorite quote around here, however, we don't look backwards for very long. We keep moving forward. I would love to connect with you either on LinkedIn or on Twitter, so you can see that at FishBooks there as well. I am very excited to introduce, as I mentioned, our tax specialist, I don't know what you are, James. The brains behind all of this, James Rhodes. So here again, you can read a little bit about James. And I remember we were going through the forums and somebody was like, well, if he doesn't work for CRA, like, why are we listening to him? And the thing that, in my opinion, who better to talk about the tax law than the ones who go up against the CRA? So again, as I mentioned, James is here to talk about that today. So I'm just gonna hand things over to you, James. What can we learn about working from home this year?
Everything. I should say, I don't refer to this as the extreme. I call this more an advanced. I feel like I didn't come up short of being extreme.
Yes.
So which is funny, you know, I see your quote from Walt Disney. I was thinking, I think that's CRA's new mission statement.
Moving forward?
Moving forward, let's move forward. So I personally think that the workspace and home deduction is going to be the biggest topic for 2020, 2021, even as everybody tries to figure it out. And in the past, I mean, it wasn't really a big deduction. Everybody thought about it, but when they realized how much work's involved, they just didn't do it. But now I think to me, it's the number one thing I see talked about and blogged about amongst the nerdy tax world that I'm part of. But so I wanted to start off with a stat. This is a stat that came out about when the pandemic started, right? That's 4.7 million Canadians who did not usually work from home did so for that first week. And I also added this stat about those having a child because, you know, as schools were closed and they're working virtually, every single person pretty much was working with their child and then learning that they were both now a teacher and an employee at the same time in their home. So we'll go to the next slide. We'll have like a queue. So, and this is another stat from Stats Canada, right? Saying 4 in 10 workers were actually working from their home. 4 in 10 other workers were actually working at locations other than their home. I think this is where I don't like Stats Canada. It's like, what does that mean? Are they working from the office? And 2 in 10 were absent. So, you know, you could look at this as 10 in 10 people weren't working that week or something different. But the reason why I raised this and we raised this as a presentation is, you know, if we have 40% of the employees now looking to talk about the workspace and home deduction when they come to do their returns, you know, they're going to go to one person, right? The person who prepares the returns and saying, why can't I get this? I had to use my home. There we go. So as they come in, there's going to be there's 3 possibilities basically. People who are employees. Nope.
Sorry.
Go back. There. People who are employees, people who are self-employed, and those who are working through their corporation. Those are to be the 3 main people that might have worked from their home that will go towards this deduction when they talk to you about their accounting. So I've decided, I broke this presentation up into 3 categories. The biggest category by far is employees. So I created this. So this is me, my terrible ability to try and make some graphic. It's horrible. I think it took me an hour.
And this is why he's a
And
tax lawyer.
and I stole it because I think from a Korean website it's a free site, but
Yeah.
no, you went back.
Sorry,
Uh,
my nose is doing funny
so
things.
I say it this way is that everybody has to think about when they ultimately sit down and say, can I deduct it? You know, for used to businesses, Section 9 is wide open, but for employees, they're the bread and butter of the government, right? You're not getting a deduction unless you jump through multiple hurdles. So before people sit back and say, let's just take it, they've actually got to think about all the tests that have to pass to get to go. So the rule of thumb always for employees is no, and then you've got to establish the yes, which is a little different for a business, which usually if it's a business purpose, you start with yes, and then you figure out if it's a no. So the starting point for employee deductions is Section 8. This is when we look at deductions allowed is that it's from an office employment, there shall be deducted such of the followings as wholly applicable to that source, which means have to be just for your employment, and they have to be enumerated. So when you look in Section 8, sub 1, you'll see that it starts going through multiple paragraphs. But just to be certain that there is no mistakes, that it's a no, that's what sub 2 is about. The general limitation is no deductions shall be made unless they're specifically permitted. You don't see this language for businesses, and that's why I say you start with a no. When people tell you they want to deduct something, you start with a no, and then you figure out why it's a yes. There's an asterisk there to talk about specifically allowed, because when I say specifically allowed, there are very specific things like union dues, very specific. But then as we'll talk, there's the word supplies. What is a supply? That opens up into a wide category of things. But I say specifically allowed because if you ever look at Section 9, the business, there is no what is allowed or not allowed. It's not, it's very, very general. So when I say specifically, I'm not meant to mean that exact word is being used. I meant to be like it's in a category of words. Next slide. So the first test is you've got to figure out, is it specifically allowed? And then even if it's specifically allowed, you've got to see if it gets disallowed then. So this is one of the, I call the second hurdle, is that even if it's permitted, it can still be a no unless you get your employer to certify it on a T2200. So the T2200 is not for every expense. It's just for the ones that are set out, being paragraph C, F, H, H.1, I, sub double I, and I, triple I. That's so confusing, eh? But that's where it might be a yes, but now it's a no unless your employer certifies it. So, and that's why it says shall not be deducted unless a prescribed form. Prescribed form means CRA has said this is what has to be used, and the employer has to certify it. And the issue that you have to remember is, I mean, this is how dated the act is, but is filed with the return, right? So now we're no longer filing most returns. And so I was in a case where they said the preparer should have seen the T2200 signed before they e-filed it. And I apologize because I don't do the returns. I don't know where it came, and they ended up dropping the case because, you know, they got the entire thing wrong. He had seen them. It just turns out that some of them were fake, but he had no control over that. So I raised that concern about if this, when the workspace comes home, getting the T2200s in advance is very crucial.
Question for you before you move on. So we've heard a couple of things when it's like
It's water. It's water.
What? I know. Couple of things. First of all, we've heard that they are working on a T2200 short. Do you have any insights? Like, is it that the CRA is expecting that they're going to get this huge inundation with work from home expenses, and so they're making things easier? Do you have any insights for that 2200 short?
I do. I've seen it. I don't like it. I think that they're adding a test that does not exist in the act. Like they call it simplify, but I'm like, if you want to simplify it, simplify it. Don't make it harder. Just because you make it shorter just makes it more confusing. Because I looked at it and I'm like, you know, there's so much that they could have done to make it easier, but they didn't. And I don't like the form because I'll talk about it, but it actually has the period. They actually talk about the periods where they had to work from home, and I do not like that because I think that they're making up something in the act that doesn't exist, which is a duration test. But we will talk about that later.
Okay, awesome, thank you. Oh, and there is another one. There is another, I don't know if it was I don't know legally, so I don't know if provision has a certain legal meaning to it, but basically it was for this period, especially for the work from home, that as long as there's a mutual agreement, they didn't necessarily have to have a contract amendment. Did you see that wording?
We'll talk about that.
Okay, all right.
It's all covered. Did you not read my? All right, so next slide. All right. So the third hurdle. So you found the provision, your employer is going to certify it. Then you've still got to ask yourself, even if you got the T2000, it's not for certain. And I see this a lot where they got the T2200 and the employee's like, why don't I get it? Then you start explaining to them, well, your employer doesn't actually know these tests, and these tests apply. And even though you have a T2200, you still don't get it. So that's why I mean, I just put a case in there, but it specifically says just because it stands for the proposition that just because you have a T2100 does not mean you get it. You actually have to do and look for if there's any more hurdles that will trip them up. So because workspace and home is my focus on this, this is why I just went through that sort of the checklist. It's either under F, paragraph F, that's where you get in commission, or I, for which I just call non-commission, everybody else. 2, will the employer certify that you had to have a workspace and home? But 3, do any provisions restrict its claim? So we go to the next slide. This is where workspace and home has its own specific section, and I want to raise this because it actually got me that you just turn to it thinking, okay, there's this provision about workspace and home. What does it permit? It doesn't permit anything. It is what's called a restrictive provision. It says you might get it otherwise, being paragraph F or paragraph I, but you don't under 13. We're taking it away because we're adding extra tests, bonus round tests. So this is where 8 sub 13, the notwithstanding part is always whatever you think you're getting, you're not. So no amount is deductible to the extent that, and it's test 1 or test 2. And test 1, we'll talk about both of them more, but it's basically where you're hearing this, where does the employee principally perform the duties, or that this workspace and home is used exclusively and by the employee for carrying out their employment and is used on a regular continuous basis. So this is where, if you're looking at the hurdles, it's the section, the certification, and then you must use it within meeting one of those 2 tests. Next slide. So these are the sections that apply, I think, to the majority of expenses that you would use. If you're looking at working from home and they're looking to start deducting things, these are the main 2 sections that apply. F is, again, where they're selling commission and they meet the criteria under I to double I, or sorry, to sub 4. The other one is basically non-commission people, where they're paying for something basically, and then there's specific deductions that they incurred to carry out their employment. Next slide. So F is a lot more open, so I decided to focus on I just for brevity and time. So sub I is we're looking at an amount paid by the taxpayer. There is another one where it can be paid on the taxpayer's behalf. Usually this is by the employer, but the employer is putting it in their T4. So this section allows the employee to take a deduction for it, because obviously it's unfair that the employer pays for something for the workspace and home. The employee has to pay tax on it, incurs, and then doesn't get a deduction for it. So this is where that's the first part. Usually 99% of the time it's the taxpayer is paid, the employee is paid for it. So double I is where you're seeing the office rent or salary for assistant or substitute, and triple I is where, this is the main section. This is the cost of supplies that were consumed directly in the performance of the duties. So, and I want to say that, so there's your sections for getting it, but always remember, this is one of the most important restrictive provisions, is what's called the post-amble, which is, okay, yeah, maybe they did it, but then to the extent that the taxpayer is not being reimbursed. So if the employer has reimbursed the taxpayer for the expense, they don't get it. But the big one is not entitled to be reimbursed. This is a really huge thing. And I can tell you when I was at DOJ, we would go and ask the employer, do you have a policy of reimbursing them? And so Brant is a case where he just forgot to submit the receipts. He went all the way to court, said, okay, I had to incur this. Here's the T2200. Here's me meeting it under sub III. And then the DOJ was like, but wait a minute, your employer had a policy that it would have reimbursed you. And he's like, yeah, I just forgot to claim it. No, you get nothing because he was entitled to be reimbursed for it. So therefore no deduction. So make sure when you're speaking to your clients, what is the employer's policy? So you got to watch that.
Yeah, because I have heard that where people just forget to submit expenses, or they have a policy about you can something like a 90-day, right? All expenses need to be submitted. Oh, that's okay. I'll just claim it on my taxes. But
Right.
You're saying that's not the case.
Absolutely, and it's this is where if you get a wishy employer that says, well, I would cover anything that was reasonable in the circumstances. Those kind of policies I hate, because then it's like, okay, you have to get into a fight with them to say, okay, I would not have reimbursed this if they had submitted it. And that's the unfortunate part is CRA hears them saying they've got a wide open reimbursement policy and says no, and then you're in court just for the HR person to admit, yeah, we wouldn't have reimbursed that. I mean, so it becomes a fight. And this is where, well, I love employment lawyers because I dated one. I would always fight with them. I say, but tighten up this policy. Stop being wishy-washy. But
Yeah. Lori has a great question. She's asking, what if they're only partially reimbursed? Can you then claim what your employer didn't cover as part of your T2200?
this is a huge problem, and I can't tell you that without I'll do an undertaking to get back to you on that question, because I see a bit of a flip-flop on it where I've seen them saying a partial is a complete, because you're entitled to be reimbursed part of it, you're out of luck. But fundamentally, it doesn't make section from the act, right? That if they're required to incur it and their employees are only not going to entitled to reimburse the entire amount, then they're not in what I think that post-amble restriction. And I think that this is where I feel like it's a CRA administrative policy where they say, okay, you are entitled to be reimbursed for the portion that is not reimbursed. You're entitled to deduct the portion that was not going to be reimbursed because you could never get 100%. And the post-amble says for what you were entitled to be reimbursed. So if they say they'll reimburse 50% and they only give you 25%, I think you're out of luck for 25%, but still good for the 50. That's my open-ended, let's be nice interpretation.
We all just get
Which
along.
I don't know if that's how CRA looks at it.
Yeah. Okay.
So,
Next.
Sorry, I put my webcam up here so I can see myself, make sure I'm doing it crazy. So deductions we get taken, I wanted to specify, because these are double I and triple I are the main sections. So office rent, and office rent gets confused. People say, well, I have a workspace at home, that's office. Can't I just write off everything like the equivalent of rent? And the answer is no. The court has actually come out, tax court has come out, which CRA fully supports, saying, no, it's actually got to be rent where you have the legal ownership of the space. And so it's got to be between two parties. So this is where CRA, on every single document you look at anywhere on their website, they will always say, do not confuse office rent with workspace and home expenses. You see it on, I was looking at their website has several different pages talking about workspace and home, including their IC, and they all say that same thing, is that office rent is not workspace and home.
And when you say IC, just for the benefit of everyone else, that's independent contractor?
No, independent contractors, it applies the same, but office rent is where you're actually going out and renting a space that you have exclusive uses. So I take it to be that this is what CRA will be looking for, is you going to another party and renting out a space, and we're not talking about using something in your home.
Okay, awesome. So
the next one is salary. Salary is you don't see this a lot, but I actually had a client who you see it a lot with real estate agents where they're employing their spouse as an assistant. I mean, is it income splitting? I don't know. Yes, I do. But the issue is salary, and they don't do it as salary because no one's actually talking to them about it, because they don't want to do payroll. They think, you know what, forget payroll. It'll be a lot easier if we do independent contractor. If as long as my spouse stays under $30,000, there's no HST requirement, it'll be all good. It's not good because the person who's trying to get the deduction actually had to pay them as an employee. So that is a really big mistake that I see, and there's cases out that there's no quandary on it. It is. So in both these cases, if you are looking to pay office rent to somebody, say, and they're non-arm's length, or you're looking to pay salary to somebody in your family, these are huge red alarms for CRA, right? They're non-arm's, what's called non-arm's length, which means they're not 2 meters apart for COVID purposes. They are very next to you. So, and I find the biggest problem is market research. I see people who do the market research and they say, well, I looked it up and I thought this. And I was like, did you save it? Because now that you're in the audit, it'd be really good to have that research. They don't have it. And so I always tell people, like, it's a joke, but if you are looking to pay a salary in this situation, you're looking to pay a salary to a family member, do your market research. What does that position pay? And then laminate it, double laminate that, and then put it in a fireproof safe, because you will be audited on it and they will be asking, what did you think at the time? So what I do is I go to various sites that are recruiter sites that will publish salaries, or I take ads. I take job ads. And so I had a client, and you know, his wife was bilingual. She had a master's education, and I went and found the positions that would apply. She had to be available 24 hours for him because he would often be in different countries sending back pitches that she had to then put into a presentation or put into a contract and send back to him. So what do you pay for that job, right? And then I had to come up with, okay, this is what the salary would be. And I say, like, to me, I did this and I'm in the objection stage. You know, the auditor tried to knock it in half, and I hit them back, right? Well, where's your research? But this is the stuff that you should be asking your clients while they're doing it. You're doing the tax return, they're trying to claim a salary. You know, put that red alarm in there, put that bug in their ear. Go out and do some research to back this up. So amount paid, right? Beware of the set-off relationships. I've numerous times I've been in fights where they don't pay them a salary biweekly like they should as an employee. They said, well, you know, I bought them a Mercedes, so it's like a salary, right? It's not. So no set-off, no bartering. And I also say this, CRA has an informal one office rule. You won't see it anywhere, but every audit I've been in where they're trying to write off a second office or a workspace at home, they're always saying, well, what's wrong with the first office? And you actually have to establish the reasons why it's not. Like I had a virtual office and I ended up having a problem with CRA at one point because I would use this virtual office to take my mail, and they kept on saying, you have an office. And I was like, no, I don't. It's a post office box, and I'll meet you there to prove it. That's why I had a workspace at home. This is actually where I was meeting clients and doing my work. So I just tell you these things is that people, as you're doing the returns or you're talking to people, these are the things you're thinking about. Next slide. So this is the big one. This is the big section, right? The cost of supplies that were consumed directly in the performance of the duties of the office, and that they were required by the contract of the employment to pay and supply for it. So this means that they go out on a whim, they're not going to get it, right? And this is where your employer might sign the T-2200 because you bug them enough and they say, sign it and get out of my office. But if CRA audits you, they'll say, okay, why was this required? And people don't understand this, but sometimes they'll call up your HR department because they've got nothing better to do. They just want, this is their duty to make sure that the sections of the act are correctly followed, which is it's required. So they call up your HR to say, what were they required to pay for? And then they say, well, they didn't really have to do that. Then you're out of luck, right? So make sure, and this is where I say people, they should really maybe think about revisiting the agreement with their employer or fix it up to be, listen, you know, I was doing this stuff informally, but you know, I was required to, let's put it in my contract. So Supplies are not capital purchases. Capital purchases, CRA talks about calculators and briefcases and all that stuff. Basically, anything that lasts more than a year is considered a capital purchase and not a supply, and it's not consumed, right? It still exists year after year. So incurred and consumed, very different things. So be aware of that. Like, as I was laughing as the joke is about, COVID was the amount of hoarding for toilet paper that happened. It's like, I never saw the correlation between COVID and extra bowel movements. Why? But this is the joke, right? For you is, if they want to write off supplies such as toilet paper, it's about being what's consumed, not what's incurred. So if they go out and buy 10,000 pencils, that's not being consumed in the year, right? So they're not going to get that. And then the bottom part is pre-existing costs versus newer increased net costs. And this is the important one. So for instance, I had a cell phone plan that was 2 gigs, and I knew I was going to blow it up. The talk time, because as I work from home, although I'm old, I'm not that old. I don't have an existing Bell line anymore. So I was like, I'll be using my cell phone and not my work phone anymore. So I know I'm going to kill my plan. So I went and canceled my plan and went and got a wholly upgraded plan. So this becomes the fight, right? Is that CRA would say, well, you had that plan before, you don't get the deduction. I was like, well, no, I didn't. I upgraded it so I could work at home, and I upgraded it just for my employment. So do I get to charge the extra portion? Yes, I definitely say the extra portion would be deductible, but some might say that the entire plan is now deductible because it was actually incurred just for working from home. But this is where I'm a tax lawyer. Going to court for me is free.
But this is also actually where we have a question from Claude, who said, so kind of similar to what you're saying, all connected, don't worry. She's asking, or he, sorry, I don't know. Can you claim expenses that would still have been incurred, such as internet access and personal mobile phone? But what I would also say is that, or if there's been an increase in those plan costs, right? Because there's a difference between the kind of internet that you would have for your kids to play around with, and then, needing a more robust plan because you're working from home. So can you speak to both of those?
Yeah, I think I do speak to it later on, but I'll hit it right now, is that if you were incurring it before, I can tell you right now, Sierra is going to say no. They have an administrative policy where I think came out and said that they will allow it to be used, but it was about cell phone and it was about extra minutes or extra data. So again, this is what we're talking about, the increased incremental costs. So if you had Rogers at home, say, and it was a standard plan, then no, you still had it. You had it before, you had it after. And I've been in numerous audits where they look at it that way. You had it that before, you had it after. Nothing changed when you started working from your home. But if you upgraded your plan from the Rogers basic, I don't know, what is it, 10 gigs to the 50 gigs, because you're going to see a lot more data, you're going to be doing these wonderful webinars, then that incremental cost to me is deductible, because you are incurring it for the works, that's a supply and it's being consumed in the course of your employment. So I don't know, that's how I draw that distinction.
Awesome, thank you.
Okay. Next slide. So this is sort of my organization when I think about this. How do you want to organize? When people come in and they start talking about it, right? To me, there's 2 categories for workspace and home, working from home expenses. The ones that are all nothing, right? They're light switches. I put this example in it. I don't quite get it, but it's CRA's example. So they say no deduction for painting the outside of the house. I completely get that, right? It has nothing to do with your workspace in the home. And I'm making the assumption that nobody's coming into your home. They don't see it. You're out in the middle of nowhere. But they say you can get a complete deduction for painting of your office space. I'm surprised a little bit, because I feel like that if you paint, it's not consumed, but they say it, so hey, let's go for it. But that's an all or nothing, right? Painting your house, no. Painting your office, complete, yes. B is the bigger one that I see, is the apportionment expenses, right? This is where heat, hydro, water, all that. What do you do to figure out what that cost is? CRA says, so this is where I go into number 2 now. Well, you have to choose an apportionment method that is reasonable. There's nothing set out in the Income Tax Act that says you must use this. CRA's example is the square footage. So I take the square footage of my office and they say divided amongst the total finished area of the house. So this is where I was saying, well, if my basement's not finished, do I exclude it? But I have maybe this is because this is, I love to paint and create things, and unfortunately maybe that boils into my tax work, but I say this honestly, like if you are working from home and you're heating that and you have to heat your office, but it ends up nobody has the smart registers yet. So as much as you turn your Nest up to heat your room, you're heating your house, right? You have a much higher cost for heating your house. But it's not a cost. Like it goes down to 18 when I leave for the day, but when I'm working from home, it stays at 20. So I don't really agree with just writing off, say 20% of my heat. I say, no, that heat actually went up by 50% because I heated my house during the whole day while I worked. So, and again, there's nothing in the act that says it's not. It's just choose the apportionment that you think is reasonable in the circumstances and be able to back it up with an explanation. Next slide. So again, the employment test, this is where I think I just was doing steps. And so, one of the tests is you get it, what do you do, or what can you take? Now this is the employment test, which is, remember getting the T2200 filled out. And I put that as my number 1 because I always say, if your employer is not going to do it and they're not comfortable, you're out of luck, right? It's very, very hard to go to tax court to say my employer won't sign the T2200 and I'm entitled to these expenses. You actually have to show that your employer was almost acting completely unreasonable, which usually, this is where if you leave them before April 30th, chances of getting a T2200 go way down. So, and I've had these fights where we're forcing the employer to give it to them. But if your employer won't get it to you and you're still working there, good luck, right? Kind of thing. So even if you do get the T2200, as I was saying before, the CRA can still challenge it, right? They are legally correct, right? I mean, they signed off you had a workspace at home, but when they start talking about the stuff that you're writing off, did you consume those supplies? Those 1,000 pencils that you bought, did you actually consume them? So after that, the big one is that you see is, does the employee pass the requirement that they were required by the contract of employment to supply and pay for the workspace and home, right? So this is where it gets a little wishy, right? Now it's very easy, but employers like, yeah, if you want to go work from home, go work from home. I don't care, right? Is the employer requiring it, or are they letting you choose? If they let you choose, they're not requiring it, then you don't get it, right? It has to be a requirement of your contract of employment. And this is the problem with most contracts of employment, is that they're not clear on this, right? It's hey, we can allow you to work from home, we can work at the office. You get your contract amended to say that you are required to work from home, because they might sign off on the T2200, but if CRA asks for more information behind it, then you'll be out of luck. So can we go back one? Sorry. So this is where I say, in some contracts, it's very easy to say, yes, you're required to work from home, right? But what happens when it's not in your contract, but your employer acts like it should be, which is now the case, right? So now we'll go to the next slide. Is that, with COVID, right? Everybody's like, okay, office closed, go home, but you're still working, just working from home, right? It's obviously that it's a condition of your employment. So this is where what they say by explicitly and implicitly. Explicitly is you're looking at your contract of employment and it says right there, you are required to have a workspace at home. Implicitly is the employer is talking to you and they say, listen, we don't have any space for you. You've got to work from home for the next foreseeable future, or maybe forever. They never put it into writing, but that's what's called an implicit contact. So implicit occurs by what the employer acts like although they say you got to work from home, or they act like you have to, and if you don't, you might get fired, versus your employment situation, which is sort of COVID, right? You can't work from office, it's closed. Your employer says, listen, you still got to produce, like I think Shopify is now, they're all online, and I don't think they're ever going back to their offices. All their office spaces are coming up for leave. So at the start, it was probably an employment situation where COVID closed the office and they're still required to work. But now the employer is probably amending all their employment agreements to say you are required to work from home. So here comes the issue though, right? As the employers open up their offices and you people are saying, hey, this is actually like the number one comment I see from people is it really wasn't that bad as I thought it was working from home, or my employees actually still produced really well, even though they're working from home. So when the employer opens up the office and you don't go back, what do? Right? Are you entitled to the workspace at home? Because technically, is it required or is it not required? And so I tell people, go out and amend your employment agreement. If you want to work from home, tell your employer to make you work from home. Get rid of that office view at the workspace. You know, businesses, the two biggest expenses, right, are the first one is personnel and the second one is usually office space. So you're saying I don't need office and they can start carving down those expenses. They'll probably be very happy. But it's all about, you know, my joke is after the CRA finishes auditing CERB and then auditing SUS, then they're going to move on to workspace and home. And this is the question that I probably would start with, right? Let me see your contract of employment for what you're required to incur before I bother figuring out your heat, your hydro, your water, all that stuff. Let me look for the toggle switch, which is, does your contract of employment require it explicitly? And if it doesn't, I need you to tell me to get a letter from your employer saying that yes, you were required to work from home. So it's great now while COVID's happened and employers' places were closed, nobody's going to argue with you. But now as things open up, it becomes a very big question.
Yeah, so this is where we're getting into that provision about just a mutual understanding and when do we really need to be backing up by documentation. So I've got a great question from Shane, who's asking, what if the employer very strongly encouraged people to work from home, but refuses to issue T2200? So you had even mentioned previous cases where the employer was refusing to issue a T2200. It doesn't cost the employer anything. So my question is, why would an employer refuse to sign it? And then in this case, what do we do when, I mean, it's clearly COVID, we're in quarantine, we're supposed to be home, and they're still refusing?
So while the office is closed, it's great, right? You've got, and we're gonna get to the duration test. I do not think that there's any duration test for the workspace and home. If you had to work from home for one day, you get to deduct that one day's expenses, right? COVID created a situation where nobody could work from their office unless you're essential, right? So to me, that's something that everybody should get. The issue becomes once the employer opens up and they're, you know, suggesting you work from home, that's not enough. And I find that I actually, people engage me to go talk to their employers where it's sort of, we sit down with the employer and we explain to them, listen, this doesn't cost you anything. Because they first worry about employers is, well, what kind of, is there a cost to me? Like, am I creating a precedent that I have to let all employees work from home? I find that it's not about the tax, it's about, they're worrying about the ramifications to them, to other employees or their situation. But the second one is sometimes, what does it cost me? It's like the T20 doesn't cost you anything. As long as you both sides agree, you can amend your employment agreement at any time. Listen, strongly suggest just say, we're gonna amend your contract, you're now gonna work from home. You've agreed to it, and I'm going to agree to it, which is now required by your employment agreement. You will not have an office space here for me. So that's what I say you have to do, because if your employer won't sign the T2200 and you're still working there, it's not going to be something, it's going to be a very, very hard hill to pass. And to be honest, if your employer is up on the stand saying, oh, they could have come in the office, then you're not getting it. And you're not going to bother, right? So that's why now is the time before, because I know people love April 30th, the tax preparers all are going crazy to try and file returns. Do your T2200s now, because you don't need the numbers. Like, you can go out and get them to sign it. You don't need to figure out what you're going to deduct. Just get them to agree that it's a requirement, or amend your agreements. Get an understanding, but get it in writing, an email. But
Okay.
I think I talk a little bit more on the next slide. So,
Okay, cool.
So aside from having a workspace at home and having your employment suggest it and all that, require it, even if they require it, even if they're signing off on it, you still have to meet one of these two tests, right? This is what I said, like 8 sub 13 is it's sort of like a smack in the face that, oh, your employer signs off on it, you've got the section, and then CRA slaps you and says, I don't think so. Because why? One, your workspace at home was not the place where you principally perform the duties of your office. During COVID, it's very easy, right? There's no office to go to. So obviously 100% of the time was spent in your workspace at home doing your work. But what happens when they open it up and they say, you can come back if you want? This is where you might flip it to the second test, which is first, the space is used exclusively. So when you're talking to CRA, don't be telling them about using your living room as your workspace at home, because that's not an exclusive use, right? It's basically you've got to take a room or a place that is not used by anybody else. So, and this is where your apportionment comes into it, right? If you're writing off a room, then that room is just for your employment and it's used exclusively for it, great. If you're creating a desk in the back of your living room, but then trying to write off all your living room, it's not going to work because you're not using your living room exclusively, right? And you're not being reasonable in your apportionment. And because there's a disconnect between the two, CRA's answer is going to be no. So aside from the exclusive use, you've actually got to use this for the regular and continuous basis of meeting clients. So this is where I love technology. Like the Income Tax Act still refers to a telegraph. I love that response. Like people are like, what the hell's a telegraph? It's like Snapchat, I think, right? But for old people. And I think it's a bunch of beeps and bops. But meeting clients, right? It used to be CRA, because I've been in fights with this, where they say a phone call is not meeting. But I don't do a lot of calls anymore. Actually, this has really taught me that I can meet clients. I have clients from all over Canada, and I meet them using webinars or Zoom, Microsoft Teams. There's no way that you can't say that this is just as effective at meeting them in person, except they don't get to see that I'm not wearing pants. So that's not in the act, so I don't have to wear pants. So I just say it as a joke, but the point is you're still meeting them. So this is where the first case in the court, and I expect CRA will update it to say that, webinars, and I think talking on the phone should be meeting, but they're always going to be worried that the floodgates, right? If a phone call is meeting clients, then it's a wide open thing. This section was designed so that people didn't have workspace in homes, and then because you'd always get the person on, did you meet customers there? And no one was letting people into their home. But this is the age. This is what year are we in? 2020? I call it PC or AC after COVID, right? I guess during COVID. It's the whole new number scheme where we're looking at ages where meeting people across the world is so easy through telecommunications and webinars. So why would they go back to you must meet in the old scale COVID non-friendly face-to-face meeting?
Yeah,
so
and this is why I was wondering if there were any additional guidelines with the new T20, like 2200 short.
There's not. I've actually got it, and I don't like it. But it doesn't. It actually, the only thing I see is them putting an extra test in there called what are the period dates that they were working from home. This is where sub-I. They're using sub-I to create a duration test saying principally performs the duties of the office means that more than 50% of the year, 50% they're saying of the year, but they should be saying 50% of their duties for that employer in that time frame of employment in the calendar year are carried out from workspace and home, which I think is a lot of words that are not in that act, right? Principally performs the duties of the office should be on a day-to-day analysis that, that they're working from home more than they're working from the office, the employer's office. To me, that's where I see this test being for. But number two is exclusively and regular and continuous basis for meeting clients. This I think, is going to be the biggest fight with CRA. And I think once the court says, you know what, Zoom is meeting, I've met you all, you've met me, you see that I have a lovely shirt. I got it in blue because someone told me I looked too pasty the last time, so I thought blue would make me look less pasty, but it's like, I don't get to go on vacation. So this is where, if you're looking at it, those are the two sections for the workspace and home. Look at number two, I think, is to be the biggest one. If you're not under the case of principally, like if something's available at the employer's office, then you're probably looking at double I 100%.
Right. We've got a ton of questions coming in, and I don't want to discourage anybody from questions. We're just not going to be able to get through all of the content and all of the questions. So that's actually why recently we sent out an email to extend this session by half an hour so that we could make sure we get all of our content done by the top of the hour. And then we've got another half hour on your calendar to go through some of the questions that we haven't been able to get to. So please keep those questions coming. I will ask what I can in relation to what James is talking about at the time. Otherwise, we'll have to just wait until the end of the session, or end of the content at least, to answer some of these questions. So keep them coming.
All right, next slide. So this is where we're sort of talked a little bit about this, the employer hurdle. If they've done T2000s, usually they're completely good. They know what's what. But if they've never done it before and now they're doing it, I find that they get a little nervous because they're like, what am I agreeing to with CRA? What's it going to cost me? So most of the time that I find that when I actually have dealt with the employers and I explain to them, like, there's no, like, listen, I'm going to run through the legal test with you. If you say yes to all of them, then you can certify with no problems that you can sign this T2200. And the idea is too that it doesn't cost them anything, right? That it's a huge thing that they always sit back and wonder what's the cost. I don't want to do anything unless they know all the things. So, but in this situation, right? I mean, if your employer is, say, a restaurant, right, and you're doing the web stuff for them, what happens, right, if your employer closes down before you get your T2200? And this is why my last note is you should be doing it now, because if you're in any kind of risky environment or a risky employer, getting them to sign it now is everything, because when April rolls around in 2021, they might not be there. And CRA is like, listen, it's a prescribed form, and you actually might have to go to tax court if you want to do it. And what you're trying to run off is generally never worth the hassle of going to tax court. And you're like, some people do it, but you'll probably give it up. So that's why I say to people, get it now, because you don't have to figure out what you're deducting. You just have to, it's a tickler test. The employer certifies that you are required to incur these expenses. They don't actually have to say what the amount is. So, okay, we'll move on. So yes, to keep me speaking faster, she'll just keep clicking the slides quicker and quicker. So this is not really, this is just my thinking. I sat back to myself and I said, what are the situations that you're going to see if you do the tax returns, or you're advising people, right? When they ask you about the workspace at home, because everybody wants it, because they all say, oh, what can I write off? And everyone is always thinking I can write off their mortgage interest, which is not. If they rent, it's a fabulous, fabulous thing. But if not, then it's not. But so employees that work from home till their place of employment was open and they return to work, right? So you'd probably be saying that their contract required them to work from home. But that's where I say there's no duration time. I say they get the expenses for that period of time that they had to work in the home. Number two is they worked from their home until it was open, and then they do a hybrid of working from home and office. This is what CRA is doing, right? When I talk to officers, some aren't going in, some are going in for 2 days a week, some are going in for more, but only for half days. That's their way of trying to stagger people, number of people in their office, right? So what happens, right, is this, I think this is where the principally part comes in, that you're still working, say in the week, more than 50% from your home. But this is where then if you're not, say you're working from the office 3 days a week and you're working from home from 2, then I don't think you're meeting the principal test. Then the question becomes that sub double I, which is, do you have an exclusive space and are you meeting clients there? So number 3, where their employer is allowing them to work from home, definitely this is the comment about allowance isn't enough, right? It's got to be a requirement of your contract. You want your employer to say you have to work from home. Your office is open, but this is what I require from you. And I'd say for number 2, that's the same thing too, right? This is what I require for you, because you do your return, it's April 21, you get your reassessed in August. 2 years later or 3 years later, up to 3 years later, they can audit you. 3 years later, you might not even remember what was going on. The people are all gone. You're like, well, I don't remember what was going on. What was my employment contract? I think it was this. You get it in writing now. Emails are fine. It's just something from your employer setting out this is what you're required pursuant to your employment contract. Number 4, employees that work from home because they do not want to go back to the office. This is a point that's your choice, right? It's not a requirement of your employment. So I say that you do not get a deduction for the workspace at home. They need to get their contract amended where their employer says, okay, now you're required to work from home. And number 5 is which is what I'm saying. You get that in writing that your employer is now forcing you to work from home. This is what I was sort of talking about. It might not be in your written contract of employment, which would be nice, but you say that email on the basis that your employer is making an implicit term of your contract that you work from home or you get fired. So this is where I think we're going to see a lot of stuff from CRA about. Is there what I call a restrictive duration test? And I say restrictive is if you didn't work from home long enough, we're not letting you take anything. And it's sort of a floodgate argument. If you're old enough, if you do returns, right? Safety deposit box. The safety deposit box became this. I don't know how many times people were like, just write it off. I had accountants who would just put it in there without even asking the question. Because, well, you probably have to keep some kind of bond or certificate in your safety deposit box, and it's a write-off. And that's why the Act actually says no to it specifically, because literally it was one of these, everybody's taking it, and how do we stop it? Just say no on it. So the restrictive duration test, I think CRA is looking to bring this out to stop everybody from getting the workspace and home deduction. And I do not see this test as being at all proper from what the reading is, but I'm just going to let you know what it is. That this is everybody who's talking about it is saying it's that sub-I. They're saying that principally performs in that section requires you to principal, meaning the greater than 50% of the year, which I don't agree with. But so I always say at the end of the day, the section is about reasonability, right? So if you had to work from your house, say for a month, that you only should be deducting that proper office space in your home for that month. The fact that the month wasn't it wasn't more than 50% of the year should be irrelevant in my opinion. So this is where I put the example down. So the office is closed for 60 days and you're required to work from home for 60 days. Do you get to deduct the incremental electricity that you had to incur for the 60 days? Like you had to keep the lights on in your office, and if you look at your bill from the month before on this bill, it's increased dramatically. Or will CRA be saying that there's no deduction because it was only 60 days out of you worked there for the entire year, so that wasn't 50%. And so this is where we're seeing this T2200 being circulated for comments, which actually says, the test actually says, was the employee required to work from home workspace in their home for one or more periods of 4 continuous weeks or more in 2020? I don't even know where they're getting 4 weeks. I don't even understand that question, but this is where if you stop the employer from signing the T2200, you pretty much stop everybody from claiming this deduction. So call me crazy, but this is where I think it's going. So this is I used to be a fire Department of Justice lawyer, so I feel like I'm even keeled, but you'll see CRA does redacts, right? Where people have asked questions and they'll give you their answer and it's redacted because literally about 75 people in Ottawa headquarters have reviewed it to make sure that there's nothing that could possibly go wrong. But some of these questions you'll see it's clearly about CRA employees have asked this question of themselves. And I'm always like, so you have a large number of employees, CRA employees who are either working from home fully or they're doing hybrid. I haven't talked to a CRA person yet that's working full time from the office. Even special investigations who are usually 100% in their office because of the sensitive nature of their documents aren't in their office full time. So when the biggest player in the room is on your side for wanting a workspace at home, I always say, well, let's see what happens. CRA gets it, we get it. So that was employees. The second one the number 2 is independent contractor considerations. So this is where you are self-employed. You're not acting through a corporation. You are a proprietorship. This technically applies to partnerships, but usually, you're self-employed. You're operating through a business name. It's just a name. You haven't created a corporation with limited or Inc. or and that stuff. So as an independent contractor, you are no longer an employee. You are a business and you are dealing with what's called business source of income, not employee source of income. Section 8, that's the deduction and restriction section, only applies to employees. For businesses, there actually is no dedicated section for deductions. It's sort of a wide open test. Section 9 is the computation of profit for businesses, and it's no restriction. It's very, very open and permissive. Like if you're saying you incurred this for a business, well, I think we'll see if we can do a deduction, unless there's a restrictive position that stops it and says no. So next slide. So these are the common sections you will see for workspace and home deductions being a no if you are self-employed. First one, was the expenditure incurred for the purpose of gaining or producing income? So first, incurred means bought, not I had it and I know I'm going to use it. Generally, there's ways around that, but I'm just going to say that it's a general rule is you have to incur it, you have to have gone out and bought it for your business, and you have to have a tie between your business, between that item and your business, right? If you go out and buy something that has no relation at all, don't try, and 18 sub 1A will prohibit you from deducting it. 18 sub 1 sub B is the capital outlay, that if you bought a calculator that's going to last more than a year, you cannot deduct it because you have to take capital cost allowance on it. So you can't take it at 100%. There are, again, there's an exceptions to those exceptions, right? If you're a computer, and then the exceptions to the computer is that actually might bump up to 100% in circumstances. 18 sub 1 sub H, you know, that's the big one that we'll probably be seeing is when you bought something, was it really a personal living expense? Like you went out and bought a truck full of toilet paper and then tried to write it off as a business expense because you'll have to work from your home. Well, they'll say no, it's personal living expense. So while 9 is open as to what can be deducted and you have restricted provisions, there is a specific restriction provision that applies for the workspace and home, and that's 18 sub 12. Now it's pretty much everything that I just went through. The tests are a little different because you're self-employed and you're no longer an employee, but it's pretty much the same thing. Notwithstanding means even if the act, otherwise in the act you get it, there's nothing that says no, you don't get it unless you meet test 1 and 2. Remember, self-contained domestic established in which the person resides. So when they try and write off something else as their workspace and home and they're not residing it, they don't get it. And then it has to be to it's either your principal place of business or you again use exclusively for earning income from your business and on a regular continuous basis for meeting clients. So next slide. So I guess, sorry, I had in my mind that slide was different. So again, this is just going over what I said before. If notwithstanding clause means it might have been a yes, but now it's a no unless you meet those tests. Self-contained domestic establishment means basically where you live, right? So it's a home or an apartment, but domestic. And the test 1, principal place of business, or 2, use exclusively, and it's on a regular continuous basis for meeting clients. Next slide. So I set these 2 cases out because it's just I thought they're great cases for the way of how you need to think about when people come into you with many different circumstances. So this is a case where the guy Jenkins was a fisherman. He was, out fishing for, what is it, 12 hours a day or 14 hours a day. And he was writing off workspace and home, and CRA said, no, your principal place of business is on your boat, right? You're there for 14 hours a day. And so the court said, that's idiotic, right? And I wish I had more time because I was trying to make a graphic where a shark would jump out eating a guy while he was doing his paperwork, but I didn't. So, but this is where, the court said, come on, like he's not going to actually be doing his tax return while he's out on, on the high seas. He has an office, and this is where he does the business of the business, right? This is where he answers his phones, where he does his paperwork, he does his tax returns. Like writing the checks for the people on the boat or paying his expenses. So, and I like a traveling salesperson is a great way to think of it because you're thinking about they're in the car, right? They're home in their home very, very little. Most of the time they're on the road. So you think maybe they're doing their principal place of business is, in their car because they're traveling so much. That's not where they're doing the business of the business. So when people come into you and they talk about it and they're asking about the workspace and home, think about where is the business of the business being done, which allows you to deduct that. But also keep in mind that in CRA's informal one office rule, right? If they have an office available somewhere to them, then you've really got to ask yourself, and this is where you're getting the documents together and laminating them to make the case that they couldn't do their business in this space. They had to do it at home. So I think restaurants, I had a fight one time where they're saying they could do the documents at the restaurant. I was like, there was nowhere at the restaurant for them to sit down and do all the paperwork. They always did it at home, and this is why they were taking a workspace and home deduction. So
just as a time check, we have about 1 minute and 5 slides left. So
okay, really fast. So this is the next case, VANCA, where regular and continuous basis for meeting clients. What is regular and continuous, right? Why don't you just give us a number? You've got to meet. CRA loves the number 5. If you're ever doing, if you look at those provisions, there's 5 always matches. You have to have more than 5 employees. But so this doctor, he made 7 calls at evening, and he met a patient once per week. The court actually said that was a regular and continuous use. And I don't think it was the meeting. I think it was the 7 calls per day. But there's a corresponding case where he met, again, 1 patient per week, and he took 1 call per day, and that was not enough. So this is where regular and continuous for meeting clients is sort of a seesaw that will depend on the business. But again, it really requires, if they're doing it and you're helping them out, you're doing this, set the red alarm off and they're bugging their ear, which is, okay, let's talk about this. How many people do you meet? How do you document it? Can we put it in writing, what's going on, or some way to show what's going on? Like print out your calendar or save your calendar showing that you're doing 3 Zoom meetings a day, that kind of thing. Operating through a corporation. So this is the 3rd category, right? Where now that you're operating through a corporation, I always say people don't really understand who have their own corporations. They just think it's a neat thing and it's a way to write things off. It's like, no, a corporation is actually a legal entity. Like it's like, hey, I'm Jimco, your best friend, who is a legal entity that can be sued and can sue people. So when I operate through that, I'm actually an employee of Jimco, and I'm back to jumping through the hurdles of Section 8. Some people just think, as a corporation, why can't I do it? It's my corporation. It's really just me. It's not you. Legally, you created a fake you Inc. And fake you Inc. is the one who is employing you. So I always tell people, consider drafting a rental agreement between you and your corporation, where your corporation rents an office in your space. And it's not risk-free, and I'm going to go into that slide really fast, talking about things that you have to think about that can create those problems. But generally, your corporation is entitled to rent space from you. The business has to be carried out somewhere, so it is entitled to rent from you where you are, as an employee, going to do the work. So avoid Section 8. I say lessens the chance of a shareholder benefit, because I constantly have these problems where people are writing off their expenses for working from their home through their corporation, is basically paying for a bunch of things, and they realize, wait a minute, it's completely wrong. Like, I'm paying the electricity bill in my name, and CRA is like, if that electricity bill was in Jimco's name, there'd be no problem, but it's not. It's in your name, and Jimco just paid for your bill, and that's a shareholder benefit. But if you create a rental agreement where it pays Jimco $100 a month to use its office, which also matches the electricity, that's completely legitimate. So if you're doing that rental agreement, remember, go out, market research, find out what arm's length people are charging for rent, and then use that as a basis. And then also make sure you actually pay the rent. I see a lot of times where people do these agreements and then they don't even bother changing the rent. They're like, oh yeah, at the end of the year, they move over $10,000 or something like that, thinking that's the rent. Don't do that. It's just paperwork. Write yourself a check.
Yeah, I've seen that a lot.
Yeah. So, but remember, now that it's paying you rent, you now have rental income. So you have to declare that, but this is where you get your rental expenses that you get to offset. So it rents it for $100. I have $100 in electricity from operating my office during the day. It's a zero tax net situation. Next slide. So this is the final restriction to consider. I mean, most of the time people are reasonable anyways, but just so you're aware that after all those restrictions, there's one last slap in the face waiting for you, that if you are not reasonable in the circumstances, it gets disallowed under Section 67, which is, yeah, whatever you think you were getting, you're not. And this is where I used to say Monday morning armchair quarterbacking, but I don't really watch football, so I don't even know if I say that correctly. But the one thing I do know about is when you're yelling at the bleachers at what your kid should be doing. So auditors yelling from the bleachers what you should be doing is not permitted. And so I haven't done it on story time because I was trying to get so much material, but I have to tell one story time. When I was at DOJ, I remember an auditor coming to me, this is right at the start of BlackBerry, and talking about this BlackBerry device and saying it's unreasonable. It's just a calendar. Why would anybody pay $300 for a calendar? I get mine from Staples for $5. And I was looking at it going, ooh, this is so cool. And I was thinking, this is going to be awesome. And, BlackBerry was awesome. But here's the auditor second guessing that he thought that $5 is enough for a calendar. And I tell that joke because it's just where they're sitting back, instituting their judgment. When you're in these fights, you don't let them, you actually make them, show them what's reasonable, and then you make it up to them to say, this is what I specifically go to them. What do you have to say that that is not reasonable in the circumstances? So I did this chart quickly just to sort of give a yes, no. I mean, this is the problem, is there's so many different things that are being considered for what they are. But I'll sort of go through property taxes for non-commissioned employee. I don't agree with that, but CRA is clear that it's a no. I think that's a supply that's consumed. But the idea is probably that your house exists and you're paying the property taxes anyway, so it's not an incremental cost, so you don't get to deduct it. But then, frankly, I don't get why a commissioned salesperson gets to write off, but I don't make the rules. Home insurance, this is where if your home insurance, they say no, but if home insurance changes if you're now operating from your house and you have to get a rider in your home insurance that you're operating your business from your home or your employee's business, that is an incremental cost that is deductible, and so that's why I put an asterisk on it. Capital costs in a home, neither commissioned employee or non-commissioned employee gets it, but if you're self-employed, you can take it. I put an asterisk because the question is always, do you want to take it? My answer is usually no to people. Puppy security force, this is where it depends how big your puppy is, but the answer is generally no, because we'll just leave that one. Capital purchases, specifically employees cannot write off capital, right? So it's no, but if you're self-employed, you can. There is an administrative position that came out with CRA talking where an employer can reimburse an employee for up to $500. Say they had to go out and get a webcam or communications devices or a phone or something like that, that even though the employer gave the money to the employee, it can be tax-free. The smarter way is if the employer just went out and bought 100 webcams because they'll get a better costing. They're just being lazy employers. But if they went out and bought it for you, or this is what's going to happen, have your employer buying it for you. It's not a taxable benefit because they still own it and they'll take it back if you quit. There's also an issue about purchase versus lease that I put in there because if you purchase something as an employee, a commissioned employee, that's capital and you can't write it off. But if you lease it such that you don't own it, right? At the end of the lease, you give back the computer, say 3 years, that is deductible because you aren't making a capital purchase. They say no for commissioned employees. I don't understand that. I always thought that if I'm leasing something, a computer, that I'm consuming it in the year, but CRA says no, and I'm just telling you that I don't agree with that. But self-employed people, yes, capital purchases can be writing off. And good. These are the problems. If you claim the workspace and home as an independent contractor or through a corporation, you have to be aware of the problems that you can cause for yourself, especially for an independent contractor. Basically, you're saying you might be messing up your principal residence deduction, right? Because you're no longer using as for personal use. You're saying I am conducting an income producing use from it. I'm using a office. So I put down the sections that you should take a look at because CRA, technically, they could say that you lose the principal residence exemption part of that office because when you're taking the workspace for home as an IC, remember, it's exclusively used, right? Or being principally used. So that's no longer your primary residence area and you can lose that apportionment. But we'll go to the next slide. So I put out CRA's folio because they actually administratively say small use is okay. It's got to actually be a substantial use of your property before you have to worry about risking that you use your principal residence exemption, or you create what's called a change in use, which can create a deemed disposition problem now or in the future. So I put out the folio. You should go take a look at it. If you have an independent contractor and they want to write off their home, have them check this out because it's very important. You know, with property prices on the rise, I don't agree with taking CCA, but if property prices are falling, then this is where it's like, well, maybe it's smart, because if they lose money on their house, you're creating a loss, is now becomes a business loss for that portion of the house that lost its value between when they stopped using it for personal and they started using it for their business. Very, very technical, but and the idea is just tell people so they're aware that they might be, if they want to take CCA, it's not harmless. There are problems that may happen and that they have to think about.
Yeah, this spring, you know, in the flurry of Facebook questions and different groups and stuff like that, where people were talking about taking that, I was like, I found a really good link to CRA that it was basically talking about exactly this. And it was essentially, unless you are planning on claiming the income on the gain on sale on your tax return to get taxed on that, like, don't, stay away, leave it alone.
Yeah.
It can really open a can of worms.
I say this because the principal residence exemption is by and large the government's biggest gift to us as Canadians. It's to me, it's better than an RSP, much better than the TFSA, right? I mean, assuming you can own a house these days and you're not in Toronto. I mean, you know, I have friends that have made $1 million. They're millionaires because they're living in a house and they've paid off their mortgage, literally like multiple millionaires. And it's tax-free. I mean, to make that kind of money from their business, they'd be working 10 years, but by living in their house for 5 years, they made that money. And so it's in this market, assuming no crash, I do not agree with, I never let people mess when they're talking to me. I make sure that they do not mess with their principal residence exemption, because it's one of these things you just want to be clean, because it is by far the best tax result they can ever get, being no tax. Is that it? Is there more? Oh, Claude, right. This is where I was closing my points up and I kept on typing. I wouldn't get off my computer last night. So it's like I was billing everyone for this. So a point that comes out of this I thought was important was, remember when you make your workspace and home becomes your place of employment, driving to your employer's place of business can be deductible. So check out this case, Gardner. I feel like that citation's wrong. I feel like it came out, but it was a great case in that the judge was actually hearing a case where he was looking at the appellant's counsel was giving him a case that was his case. He was the lawyer who argued it 10 years ago, and he's like, this is a great case. It was my case. And basically, it stood for the point that because the employee had to work from home and their employer did not have a place of business, a place for them to work, that when they drove from their workspace to their employer's place of business, that was not personal. And I think it had to be 90% too. And so I cite that section. It's not what I want to talk about, but it's a ramification that comes from this. CRA will say no because, well, it's personal. You're driving from your home to your employer's place of business. And it's like, no, my place of business was in my house. Closing point number, I think I couldn't stop with one, so I did it two. This is where I wanted everyone just to be aware of this comment, that because I've seen employers talking about paying an allowance for the workspace and home, and then everyone thinking, well, I'll just take a deduction. That's like, no. CRA's position has always been very clear. Just because you get an allowance, if you get an allowance from your employer, the Act has two distinctions between a reimbursement and an allowance. An allowance is just an amount. Here's a bunch of money is basically an allowance. That is taxable. They have to put it on your T4, but it doesn't automatically mean that you get a deduction. You still have to pass all those hurdles that we talked about in order to get the deduction. So just because your employer pays you an allowance doesn't mean you can just automatically take the deduction. You still have to jump through. And so I put what the CRA quote is because they're very clear that you getting one doesn't mean you get the other. So good. So that's my presentation. This closing point is I am creating a newsletter. I do case comments for fun, mostly when I'm bored. So if you sign up for my newsletter, I try and send out cases that I think are interesting to people, not just me as a tax nerd.
I'm also sending it through the chat so that it will take you directly to the link. I will also put the LinkedIn group in the chat for you guys to sign up super easily as well. There's some good stuff in there. And of course, if you happen to be on Facebook, we would love for you to join the Canadian Sage Advocates group on Facebook as well. Okay, we're not done though, because we have a bunch of questions, James, that I could not answer. So I need your help a little. I need your help. I'm actually going to stop sharing and hopefully, so it should just be us. Carla, if you can just confirm that.
Yes, that's right.
Would be great. Okay, so James's firm is taxationlawyers.ca. My name is Rachel Fisch. I'm on LinkedIn. You can get me at Fischbooks. And of course, James is also on LinkedIn and loves it when a bunch of people connect with him as well. Actually, that's how we connected. And so when we were looking for forum speakers, Carla reached out, that voice that you're hearing in the background every once in a while.
The voice.
For some CRA specialists. And so that's when I thought of James. So that's how this it all was because of LinkedIn, James.
Which is funny enough, as used to be my LinkedIn title, which was unlicensed CRA behaviorist. Which was a no. If you want a deduction, no.
Yeah, okay. So now we have to go through, let me just post those links. They're here. So we've got the newsletter. I sent that to Carla. Carla, can you just turn around and send that to everybody else? Can you also send, Carla, can you also send everybody the
Facebook group? I got it.
Facebook group? Yeah. And then join James. Let's see if we can, when I checked your LinkedIn group today, it was 5,550 members. So that's like 850 members in Sage Forum, which is pretty cool. LinkedIn group here. And I will try to not send it only to Carla. There we go. Okay, so now let's go through some of these questions. I was able to answer some of them. You may find that some are wrong. Most are right, but there's one that I do need your help with. So there are several questions that talk about splitting home expense write-offs, right? Because if you think about the fact that everybody was home, right? So if you have a spouse or a partner, you're now all living at home. So Louisa's question is, would both husband and wife be eligible for any home deduction when both working from home during this time? How does that work?
The answer is yes. I never have a problem with this. I just, there was a CRA comment I think got released, which was, this is where people were like, can we both write off the electricity? And the answer is, while technically you could, the answer is no, right? You're not being reasonable circumstances. You know, if you get audited, you've basically deducted the same expenditure twice. Yeah. So there's nothing that stops that says you can't both have workspace and homes. Just remember, the test is sort of an exclusive test, right? Exclusive for your business. But that's not to say that two people can't operate. But you just have to remember that if you can't both try and write off, you know, say the new internet cost, right? 100%. I say apportionment 50-50, right? I mean, but if one doesn't want to do it, the other still had to incur that expense to have it, then this is where I say the act permits that person to take 100. But if you're going to have another person deducted as well, then this is where reasonability kicks in, right? You're not incurring 100%, don't deduct 100%. Okay.
Larry had a question. Would it be easier to include a basic amount above the employee expense deduction as long as the T2200 is signed, for example, the greater than 50%? So I don't actually totally understand that. For me, my understanding is that claiming anything has to be specific, like you have to be able to back it up, right? That's what you were saying.
Oh. Yeah, there's no this is a reasonable amount, right? I think I get that. Like, okay. Hey, I don't want to get all my electrical bills. I don't want to try and figure out what the electricity was for the room based on the two bulbs that were on. So I'm just going to take this amount. This is where I could see you're taking an electrical bill, which is a fixed expenditure, right? You've incurred it. You don't know for certain what was the amount that was used for the office. Like, it's really hard to figure out unless you're looking at your spikes on a day-to-day, what was the day I turned that light bulb on. But this is where reasonability kicks into it, right? Like, if your hydro bill is $100 per month and it spikes to 200, okay, well then I see a correlation. But if you are doing a ton of other things and you don't know what the electricity is, this is where just don't, sorry, there's a saying in tax, right? Which is pigs get fatter, hogs get slaughtered. So if you get hoggy on what you're trying to write off, CRA will slaughter you. So I think if you have the electrical bill and you're finding an apportionment method that works for that, and you've got something to back it up and you're being reasonable in the end, then yes.
Yeah, back
Just
up.
take an amount. You can
Okay.
take an amount that doesn't have to be to the penny correct.
Okay, so we have a few questions also that talk about splitting between self-employment and employment expenses. So Bianca's asking, what if you're self-employed 50% of the time and now also work from home for an employer the other 50% of the time? Right, this is part of that gig economy bit where you're actually working either for multiple people or part for yourself, part for someone else.
I have to go offline for this legal answer, but no, it's not a legal answer. This is where I look at, I wasn't a terribly great athlete in school, so I did track, and I think that they put me in track because, because the good kids they put me on first string because our school wasn't that good. So they put the good kids on second string so they could actually have a chance of winning. But I remember being in the hurdles and falling and tripping over almost every hurdle. I think that was my last year of hurdles. But so I say that because as an employee, there's almost no hurdles, right? Section 9, wide open. You're using the space, you're conducting a business, you need it anyways. So do you want to overly complicate it and then be like me and go to the first heat and jump through all these hurdles to try and get it on as an employee where you have to get a T2200 and show that's a condition of your employment? The answer is no. If you had to incur this expense anyways as part of your business, then I would go for the business. I mean, absent something being occurred that's directly and only for the employee, which in a workspace and home is really kind of hard, right? Hydro, water, all. You know, one minute I'm working on my business, the next minute I'm on I'm an employee. I'm gonna flick the lights on and off or use a different circuit. You can't. So go for the easiest race. Be like the people who were better than me and be in the second heat and do it as a business.
Okay. There's also another few questions that are very similar from Marion, Marcy, and Albert that are all talking about, so the employer signing the T2200, so you're saying like just get it signed, but the employee doesn't know what the expenses are like yet, right? So how does that work?
So the T20, even like I don't have the new one in front of me, right? But it doesn't actually say what is the amount. So roughly, you're going to be telling when you do the T2200, they do have to set out the expenses they're required to incur, but those are known. Like I know this, I need you to work from your home. I need you to drive. I need you to use your cell phone, blah, 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 and I'm not reimbursing you for it. What your cell phone is irrelevant at the time of signing the T2200, right? What your heat will be is irrelevant. What is more relevant is getting this form signed. If you have 100 other employees who are lining up to get this thing signed, do it now because you don't need your numbers. I mean, maybe in the end it turns out that it's for $1 and you wasted your time, but it's not because you'll know that now. So go get the form because you don't, and there's nowhere on it where you actually have to say this is what they had to incur as an amount. It's just the categories.
Okay, so further to that, Sammy's asking, can you tell the employer if there are any legal concerns or HR liabilities? So we talked about this, that this doesn't, signing a T2200 for the employees puts no risk or cost on the side of the employer.
Yeah, no, I mean, their only requirement they have to is that it has to be, they have to agree that it's a condition of your employment. It doesn't have to be explicit. It can be implicit, but they're going to agree with you, right? Yeah, I need you to work from home. We're closed. Or I'm taking away your desk. I'm using it for something else.
Okay, we also have, oh gosh, we had several that were about prorating. So for example, Janet's asking, they use the living room 1 day a week for yoga training as a self-employed yoga trainer. Another one says, I use my living room as my office from 8:30 to 4:30, and then as my living room after that. I think part of the challenge of everyone working from home is that some people have not purchased or live in homes that were intended to be used for offices, right? So they're studio apartments. Is this where we get into the square footage thing? Because I know that there's a test about exclusivity, right? That this space has to be used only to be working. But how would that work if that wasn't what?
So I guess, at least in the context of yoga training, I mean, if you were saying it was a yoga studio, and I've seen this now where people were doing they're broadcasting their yoga sessions. I was watching one actually where they were doing yoga and they transmit to all the people because of during the height of COVID. So this is where I like to say that it does become hard, and that is it used exclusively. This is where I to me it's okay, that area was exclusively used for the yoga during that time, and I know it's not a great, this is where the act breaks down on requirements for people, but I feel like if you are making money and using your home and you're being reasonable in what you're deducting, say the heat and hydro from 8 to 4, that to me is meeting the requirements, right? So now the question was, as an IC, so you're independent contractor, which is a lot wide open. You're not jumping through the Section 8 hurdles. You're jumping through the Section 8 sub 12, 18 sub 12 hurdles. And so this is where the first question becomes like, okay, so you're using the living room as your yoga studio, but that might be your principal place of business. You're probably not going and doing the yoga studio anymore because it's closed. So there's no, to me, there was no test, right? Like during this time period, the yoga studio is closed. It was my home. I do not like the principal place of business test being, well, for more than 50% of the year, your yoga studio was open, so nothing.
Right.
I prefer me, because I'm me, right?
Yeah.
The guy who came last in hurdles, who's traumatized. So if you're an IC, independent contractor, and you're doing a yoga studio from your home, I'd say write it off, and you're fine under 18 sub 12 sub A sub I, being that's your principal place of business.
Okay. A couple more here. So we're at 326, so I'll just take a couple. So we have several of those actually. We have a dance instructor, we've got a fitness instructor, where they are preparing lessons, or they are, you know, as you said, recording things. So I think that your answer there kind of covered off several of those. So we've got a few different people who are answering very similar things. Yeah, go ahead.
But so I was talking about while the studio is closed, I think the nuance might become now that if your studio is open and you're still doing at home, can you write off your use of your home space? So this is where if your principal place of business, to me, you'll run into a problem with CRA that there's the one office rule and one place rule, right? You're renting a studio, why don't you just do it at the studio? And this is where you sort of have to talk about why we do, well, I had to do it at my home, and this is why I do it at my home, and here's the reasons. And you might store all the files in your home because you're not keeping anything in your studio, or it's for you. This is where documentation goes. I say red alert, in that just don't take it. Keep your documentation about why you had to use your home, such that if you use your home more than 50%, on a day or on an average, then your home actually becomes your principal place of business, which doesn't stop you from deducting your yoga studio as rent.
Right.
It's just, can you meet that principal place of business? But just remember, CRA is predisposed to say no, that we think you had a studio, so that's your principal place of business, and you will be required to show otherwise.
Awesome. Okay, there's another one. Alex is asking about, does it matter who the bill's expenses? So if there's a shared space, right, kind of back to that question earlier on, but some bills are in the girlfriend's name and some bills are in the boyfriend's name. Does that matter when it comes to who can claim what? Like if you just kind of added everything together, divided by 2, or does it matter who it's being billed to?
This is where this is where it really comes down to the auditor. To me, you're paying into a joint account, the joint account's used to pay the bill, you are incurring it, right? It's just not in your name, which is different than incurring it. But I've been in fights where auditors will, people bought gas and they'll see this, like they get down to the point where they're looking at the gas bill saying, well, this isn't your name, it's your girlfriend's card. I was like, oh, I paid her back. And the auditor could be like, okay, that's fine. Or sometimes they get into it. Oh, you didn't pay for it, so you don't get the deduction. So this is where, if you are doing it, it's the best to try and change the things now. Like if you know you're going to work from home, change the electrical bill into your name. But it doesn't mean you can't deduct it, right? I say this is, it really becomes about the auditors and how nitpicky they want to be about, can you prove that you paid it? If you don't pay it though, it can be a problem, right? If you never pay the electrical bill and you're writing it off, I don't like that, because you're not incurring it, which is one of the requirements, right? That you incurred it.
Yeah, cool. Okay, so I actually think that overall, we touched on at least all of the themes that were being asked. I know there were some questions about the rental income with a corporation. And basically what you're saying is, first of all, make sure that you have a rental agreement in place. Second of all, that the employee of the FAQ Inc. Not only claims all of the home expenses, but also that rental income from the corporation. So I feel like that's the piece that's been missing between that corporation and employee.
It's a little different.
It's also business expense, the rent business expense from the corporation side.
Yes. I love using, aside from Jimco, my next favorite corporation name is Shamco. So you've got Shamco, it is deducting the rent that's paid to you as a business expense. So that's Shamco's T2 return. You are declaring rental income, but you get to take your rental expenses. You don't have to worry about compliance with 18 sub 12. You as an employee are not writing it off. You are claiming an expense for rental against your rental income. So it pays you $1,000 and you paid $500 of heat, you paid $500 of hydro, so your net result zero. But if it pays you $2,000, then you have $1,000 of rental income. Just be aware, right? That's a non-arm's length situation between Shamco and Jim. So that CRA can say, listen, Shamco would have never paid $2,000 for that backyard shed that has no light or heat or hydro. At most, it would have paid $50. So they can use Section 67 to say the corporation wasn't being reasonable. It doesn't get it deducted. So they deduct, the deduction turns to zero. So you have tax to pay by the corporation. And because you own the corporation, they're going to say, listen, this is a shareholder benefit. You took advantage of Shamco and got it paying you $2,000 when you would have never paid you $2,000 and you had no real expenses. So you're going to have a shareholder benefit of $2,000. So that's why I say you got to be reasonable and you got to do market research to ensure that you're in commercial guidelines of what's appropriate in the circumstance.
Yeah, I'm getting a couple questions here that just to me go to that test of exclusivity is not being met, right? So I've got storage, I store some stuff from my business in my garage, but again, it's a portion of and not used exclusively for the business.
So nothing in this thing says it's got to be the entire room. Like if you're storing half the room's this, half the room's that, it doesn't say the entire room must be exclusively used. No, half the room was exclusively used for my business. So it's just a concept thing. Just remember that space is exclusive to that. But this is where you have your apportionment comes into place, right? Be reasonable. Don't try and take 100% of the room on the basis that it's exclusive for only 50%, right? It's a dichotomy between what you are saying and what you're trying to go for.
Got it. Okay, well, we're actually 3 minutes past, so we're gonna have to wrap things up. Thank you, everybody, for joining us today. We really appreciate it. We are actually gonna have a couple of more of these before the end of the year. So in November, we're gonna be talking about gifts and bonuses just in time to prepare those payrolls for the Christmas holidays. You are not getting any gifts or bonuses, James. I mean, not from me.
I was about to ask, what's my?
So for those of you who have joined today's webinar, we'll of course make sure that you get that information. We've also sent out a link to the webinar hub. And so all of the information when that comes around will be located there as well. You will be getting a recording in about 24 hours of this session, and it will be on the webinar hub in about 3 days time. So again, to contact me or connect with me, I'm on LinkedIn, Rachel Fisch, or Twitter @FischBooks. And James, best place to reach you is LinkedIn, James Rhodes, RHODES. Be sure to join James's LinkedIn group, Sage's Facebook group, and we're looking forward to connecting with you again soon. Thanks, guys, and thanks so much, James, for all your expertise, of course, as usual.
Thank you for your
Thanks.
expertise.
Thanks.